There has been tons of volatility in the market and has led tons of investors to take unreasonable losses without putting proper risk parameters in place. And in this video, we have some US dollar news coming out. So I want to make sure that I'm getting this in front of whoever needs to see it before the news. Without further ado, let's jump right in it. Welcome back. If you're new to the channel, my name is Matt Jimenez. I'm an entrepreneur who has worked with the greatest minds in finance over the last several years, and I'm here to pour into you guys everything they pour into me. Ever since last month, where I was exposed to tons of volatility in the market due to Japan raising rates, I'm putting massive emphasis on staying up to date on what's coming up in the coming week. So every Sunday, I'm going to be sitting down and addressing what is ahead, if we have any volatility, and where the market could potentially head, depending on positive and or negative news. Now, enough blabbering, let's get straight to the news. Here's Forex Factory, and this is the calendar of showing us upcoming economic news releases. And to the far left, you'll see the currency in which the news is coming out around. And as I go through this, you're going to see a lot of US dollar things coming up. One thing to note is the folder to the left will indicate how much impact this news actually has. So as you can see, I'm hovering above a yellow one. Intel's low impact expected. And then of course the orange then would be medium. And then the red will go ahead and be high impact. So it's going to be very important to know that, because when you're looking at news, well, how do we filter through what's important and what's irrelevant? They made it easy by allowing you to see it in color code, what is of most importance and what is kind of irrelevant. Again, so it is Sunday at the moment, which is allowing me to address everything that's coming up for this week. And the most important thing that I want to look at is all the US news. The reason being the US news is because I'm going to go ahead and open up my trading account, and I have lots of US dollar positions. So I want to make sure that with the US news coming out, that I am paying attention to this software, because I might want to turn off my auto trading so that way I'm not involved in the software taking on more positions during a volatile time, or if the position is moving too far against me. But irregardless, if I'm too busy and I can't hit this button in time, I do have a stop loss in place at 15%. So no matter what happens, I'll only take a 15% hit. There's something I always say: losses in investing are inevitable, but how much you lose is up to you. And with that being said, 15% is where I draw the line. I don't want to lose anything beyond 15%. That's my cutoff. So that's why I have the stop loss set at that. Of course, I could change it if I'd like. So I have AUD USD, and for some reason on my phone with my MetaTrader, I have a lot more positions that I could pay attention to than what's showing up on here at the moment. I'm not sure which one's lagging and which one's not, but that's what it is. As you can see, there's even more AUD USD positions coming in. Now, another thing to mention, and this is a note to self because none of this is ever financial advice, is that this margin level sitting at 5,600% is very important for me to watch, because if this dips down into the sub 500s or anywhere near that, then I probably want to make sure that I'm turning off my auto trading, because then it prevents the algorithm from scaling into more trades, which of course will eat up your margin. More trades equal more margin. So if I could stop the software from taking on more trades, it prevents me from eating up more margin, which ultimately uses more leverage, which ultimately can destroy my account. But with a stop loss in place, I don't really have to worry. Now back to the news here. So the first thing that pops out for the US dollar is this right here, is consumer confidence. And to the middle and to the far right, it shows the previous number. In the middle, it shows what's forecasted. And of course, the news hasn't came out yet, but over here will be where the actual is. And this is the number that comes back for us to read. And if it's above the forecast or below the forecast, it could have the influence of a negative or positive impact on the US dollar. And if you don't know what this is, you can just hit this folder right here. And when you hit that folder, it'll pop up this bracket, which gives a clear description of really everything you need to know about it. So what it measures: level of composite index based on surveyed households, usual effect, actual greater than forecast, good for currency. So if this number comes back better than the forecast, that's good for our currency. So you could expect US dollar strength. With that being said, I'm in a lot of short positions on AUD USD. If that's US dollar strength, then that means if the volatility was come in because of this news for any given reason, then the strength would be in my favor, because I am short AUD USD. Now, this comes out every single month on the last Tuesday of the current month. Next release is September 24th. And why should we care as traders? Well, Financial confidence is a leading indicator of consumer spending, which accounts for a majority of overall economic activity. So that's the first major piece of news that comes out. That comes out Tuesday at around 10 a.m. Then again, I have this manufacturing index. I don't think it's going to be of so much significance because it is an orange folder. I'm not going to go over this one because I don't want to bore you guys. It's an orange folder, which means medium impact. And I want to take this time to go over the main points. So me being short AUD, USD, it's going to be very important to pay attention to both currencies because either strength or weakness on any of those currencies obviously will impact how the trade does for myself. And again, massive data coming out for AUD. So there's also big news around the Australian dollar, which is the CPI. And if you guys don't know much about CPI, I made a video plugged right up above here. Go ahead and click that and get a good understanding of CPI. This comes out every single month. Typically, it says right here about 25 days after the month ends. So the next one is September 24th as well. Consumer prices amount for a majority of overall inflation. Inflation is important to currency valuation because rising prices lead to central banks to raise interest rates out of respect for their inflation containment mandate. This is important because this is a leading indicator so banks can understand where they want inflation to go. They could either raise rates, cut rates, and this will play a big role into the CPI. And it also helps them measure where inflation is really at. Again, I don't want to talk about it too much because I did make a video on it. Now scrolling down a bit deeper, we have an orange folder at 1:15 a.m., which is a Waller Speaks. This is a FOMC member, not too important. These, whenever you see speeches or someone's talking, you could expect it to be a bit hard to gauge because it's led up to the interpretation. So if you see like Jerome Powell speaking, then it's led to the audience to gather clues of how he spoke and whether that be dovish or hawkish, then they could try to make an educated decision on whether they're going to do something that's negative for the currency or something that's positive for the currency. And based off a speech, you have to interpret it. So it's really hard to gauge those. It's not data driven. There's no metrics. So I kind of skip over the talks, but I do want to say I definitely pay attention to what happens during the talk because I want to know what are the things being said so I can position what to expect in that currency in the coming weeks, days, months, whatever it may be. Like for instance, based off of how they were speaking previously, I now have a inkling that they're probably going to be raising rates moving forward for the US dollar. And that's just due to speeches being held by the central bank. Scrolling down a bit more, Thursday, we have some more US news. So later in the week here, we're going to have even more volatility. And I think this is where majority of it is going to come into actually, because we have this important thing right here. This is unemployment claims, and this definitely has an impact on how markets behave. The forecast is 240,000 claims of unemployment. And if that number comes back higher, then you could expect more people are claiming unemployment. So guess who has to pay that? Well, taxpayers, government have to pay that. And that is probably not good for a currency. Why? Because now if we're supporting more people for not working and we're funding it through tax dollars, what do we have to do? We have to create more currency because taxes can't even pay off the debts that are owed. And that leads us to printing more money and putting us deeper in the hole than we are. So this is a very important number to keep track of. And this comes out every single month. The next one is September 5th. And what it measures is the number of individuals who filed unemployment insurance for the first time during the past week. Now, one thing to note is majority of the time, unemployment claims are kind of a lagging indicator because think about it, it's a claim. By the time it comes in and gets accounted for, it's already too late. It's already been priced into how much we're going to have to pay for these people that are unemployed. Why do traders care? Although it's generally viewed as a lagging indicator, the number of unemployed people is an important signal of the overall economic health because consumer spending is highly correlated with the labor market conditions. Unemployment is also a major consideration for those steering the country's monetary policies. It's also known as job claims for those that are not familiar with unemployment claims. Scrolling a bit down, we got some more really important news for the US dollar. This is the core price index, which is very important to keep track of. And let's go ahead and pop this thing open. This measures the change in the price of goods and services purchased by consumers, excluding food and energy. This is important to note because anything that is measuring spending is obviously a tool to measure how inflation is doing. And this ties in with inflation rates as well. So these announcements that come out are ways that the central bank can gauge how inflation is doing, even though we know it's doing far worse than what these numbers even report. This is the way of them justifying what is actually happening and how they can quantify, oh, it's only 2% or 3%, whatever it may be. But nonetheless, the forecast is 0.2%. So if it comes back actual at 0.2%, then that would be good for the currency. Anything that comes back on what's forecasted is typically good for the currency. Now, that's all the news coming up. Let's look at the chart, because the US dollar is taking a dump right now. As you can see, we are coming back to lows we have not seen since the end of last year. And this is a massive support level that it seems to just be breaking right through. I think potentially what's going to happen here is this is a pretty overextended move. If I was to go ahead and grab my measuring tool from when this move started to where it's at, we've already had a 5% drop, a little over. And my prediction, and this is not financial advice, but this is what I'm hoping for, is that the news that comes back for the US dollars is going to come back a bit strong, which can give some type of alleviation bounce. So I think we might trade down to this region and pop back up to retest these levels, which again, in this area, I will go ahead and address how the price action is looking. But typically, if we get strong news and that helps the dollar, we can have a normal correction to a means, and then potentially some more news that come out, which will go ahead and send this move to continue this overall downtrend. But I'm not a fortune teller and I don't have a crystal ball. That's just my prediction if the news comes back strong, and that's what I'm hoping for. If it does come back strong, my positions will be in heavy profits and I will be extremely happy. And if not, I'm sure you'll see all the evidence on my FX book, which I will be reporting every single month for you guys to keep track of how my performance is doing. And in fact, I'm going to fund a couple more accounts just to be a bit more diversified. Now, if you enjoyed this video and you got any value out of it, go ahead and hit the like and or subscribe, and please leave a comment. Like always, my friends, peace.